Welcome back. I'm Mo the Closer, and I wanted to make this video because a lot of our clients are real estate investors. However, a lot of our partners are real estate agents. And I always get the question, does this violate RESPA? Like, is it illegal for us to work with private money lenders? And I wanted to make this video so we can get some clarity. So pay attention to this video. It's going to be very detailed. I'm also going to leave space at the end for if you have any questions. I want you to drop them down below to the chat. So very quickly, if you have not already, go ahead and subscribe. Make sure that you are locked in so that you get all of our videos. And if you have some suggestions about any future content, make sure you drop it in below. But let's get into it. Why working with private money lenders does not automatically violate RESPA. And this is to understand the critical condition between professional relationships and referral fees, which is key compliance to real estate practices. So here's the core myth right here. Agents can't work with private money lenders because of RESPA. That's not true, right? The reality is RESPA, which stands for Real Estate Settlement Procedures Act, does not inherently ban professionals in real estate. Instead, it specifically targets and prohibits certain behaviors tied to particular types of loans. And mainly, we're going to be talking about the relationship that RESPA prevents from private money lenders and federally insured and funded loans. Those are the ones that RESPA is concerned about. So RESPA does not ban legitimate business relationships. So referring your real estate investor to a private money lender is just a referral. It's just for business information. This isn't in any type of way giving any type of ban because these are legitimate business relationships. RESPA specifically bans certain relationships for referral behaviors linked to federally covered loans. And we're going to talk about that as well. What RESPA actually prohibits. To understand compliance, it's crucial to identify three essential elements RESPA Section 8 prohibits. One, think of value, which is any payment, advance, loan, commission, discount, gift, or tangible benefit. Settlement services provided in connections with the real estate settlement, including mortgage origination or closing. And then federally related mortgage loans secured by a first or subordinate lien on residential property. All three conditions must exist concurrently for a RESPA violation to occur. All three conditions must exist concurrently for a RESPA violation to occur. The three RESPA triggers in detail. Now, a RESPA Section 8 violation requires the simultaneous presence of these three elements. So the settlement of service, which is mortgage origination or closing service, which is the thing of value, or federally regulated mortgage. And that's a loan covered by federal regulations. Even if even one of these triggers is absent, RESPA Section 8 referral fees prohibits are typically not active. This means that that's not what they are after with RESPA. They're mainly their main goal is these federally related mortgages. So everyone who says a private lender can't work with a real estate agent, you're wrong. Because we're not offering federal funds, right? Private lenders do not offer federal funds. I'll take that back. Most private lenders do not offer federal funds, okay? So I just want that to be clear. Why loan purpose matters. RESPA's applicability hinges significantly on the purpose of the loan. Not every loan falls under its purview. So consumer purpose loans, primarily for personal, family, or household use, often involves a primary residence. These are generally covered by RESPA. Business purpose loans, which is what an investor gets when they're operating with private money, used for investment or commercial activities. For example, like a fix and flip, rental properties, commercial real estate. It's not intended for personal, family, or household use. And these loans typically fall outside of RESPA's primary scope. Because remember, when getting private money, 9 times out of 10, you're not able to live in that property as your primary residence. So this doesn't even matter, right? I'm not saying it doesn't matter, right? I'm not going to say that, but it doesn't apply. So saying something is kinda or any type of red tape, that's not the case because it doesn't even apply. Where private money fits in, private money lenders are not automatically subjected to RESPA regulations. The key distinction lies in the loan's purpose. One, business purpose focus. Many private loans are for business purposes such as investment properties or development projects. They're not federally related. When a loan is primarily business purposes, it is typically not classified as a federally related mortgage loan. RESPA exceptions. In such cases, RESPA's referral fee rules may not apply, which offers more flexibility for agents. Understanding the specific nature of private money transactions is vital for making sure that you're still in compliance. Now, this is the fun part right here. What agents can legally do. Agents have several legitimate avenues to engage with clients and lenders without violating RESPA. Educate on financing options. Provide clients with general information about various financing methods, including private money. Introduce multiple lenders. Present clients with a choice of several qualified lenders, allowing them to take an independent decision. Host educational events. Organize workshops or seminars that offer valuable information to clients and the community with lenders as speakers. So a lot of times for our team, we host events for real estate agents and real estate professionals. And it just so happens there are a lot of investors there as well. So we can host events and you just make the introduction with your investor to a private money team. This way, it keeps you out of any of those details, which this is what it's meant to do anyway. It takes you out. You're still that closing agent, right? You're still the agent that's there, but you don't have to deal with any of the details because the details are in the relationship between the investor and the private money lender. And then we can market collaboratively. So engage in co-marketing efforts where the value exchange is for legitimate services and has independent value, not tied to referrals. The red line. Here's what we need to avoid. The core prohibition to RESPA Section 8 is the exchange of anything of value for referrals. Be especially cautious when compensation per deal compensation, receiving payments for each specific referral, volume-based increases, which is compensation that increases with the number of value of referrals, and tied to closing. Payment contingent upon a referred loan successfully closing. Remember, the structure of the compensation agreement, not just its label, determines its legality. So here's the compliance test. Does compensation increase when referrals increase? If your answer is yes, then a significant RESPA risk exists, and you should seek legal counsel to review your practices. The final takeaway, compliance is leverage, right? RESPA does not prohibit legitimate business relationships or the education of clients. It specifically targets referral fees on covered loans. And we went over that. That's federal-backed loans. So know the loan type. Distinguish between consumer and business purpose loans to understand RESPA's applicability. Also separate education from referrals. Ensure any educational or marketing activities have independent value and are not disguised referral payments. Now, this is a disclaimer. This content is for educational purposes only and does not constitute your legal advice. So always do your due diligence. So always, if you still have questions, consult with your qualified legal professional to make sure that you're making the best decision for your business. But we do deals every single week with real estate agents and real estate investors because real estate agents are one of the top ways to connect with investors because investors are always looking for someone else to look for their properties, which is great. Right. So if you are an investor, find you a real estate agent to work on your team to be able to find your properties. Your real estate agent can connect you with us for your actual purchase. And then from there, we can go on and get you into your next deal and the deal after that. So if you still have any questions, drop your questions below. We'll do our best to answer them. I left a link to the school group. If you have more questions, jump in the school group. Feel free to ask questions there as well. There is a link. The school group is actually free. The information there is free. And as usual, I'm Mo the Closer. I'll see you at the bank.